Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be taking a nice little weekend dive into LDPS once more to look at what those words mean. And that's basically it. So we're going to be looking at the text that LDPS puts out. So the organics, aggressive, eager, as well as the flow to bid, flow to ask. We're going to investigate what's going on there. Behind me as we chat is Bitcoin on the 30 with LDPS on balanced. So we can get some real-time looks at the tool in action as we talk about the more theoretical stuff. The one thing I do want to mention, I guess two things I want to mention, is that the LDPS settings that I predominantly use for the text output is declarative for LDPS reporting style and LDPS detail amount on full. That leads to the second thing that I want to mention, which is this information can be helpful, but it can also be a little overwhelming at first. And so I want to emphasize that the text output is largely additional, I think, useful information, but ultimately LDPS is designed to give clear signals and clear indications without additional detail. So if you watch this video and it still is a bit too much, maybe I haven't explained it well enough, then by no means you're not necessarily losing much by moving those values, those settings back to the default, where instead of more detailed descriptions of things, for instance, maybe we just do a simplified and interpretive output, and that just reduces the text to a more palpable bit of text. But for those of you data nerds like me who enjoy seeing a bit more what's going on behind the curtain, then full and declarative plus this video is exactly where you want to be. So the goal or the plan today is to do another quick, I think in a previous video I briefly went over the differences between the organic, the eager, and the aggressive parties in the market. And so we're going to go over those again real quick, sort of solidify what it means to be an organic bid, an eager ask, aggressive ask. And then we're going to look at the flow states. So that's the flow to bid, flow to ask, or even neutral sometimes it pops up. And finally, at the end, we're going to put it all together in some more practical terms and figure out what all of this ultimately means for us. Why is it helpful to know these data, and why should we care, right? So I guess without further ado, let's go ahead and get started. So the first task that we have today is question mark, organic, eager, and aggressive. And so let's tackle that. The first up, the organics. And these are usually just abbreviated with 0. The defining characteristic of the organics is that these are long-term, price-sensitive, value seekers. So the organics are your kind of prototypical trader in the market. They're defined by being completely driven by the value of the expected value of an underlying. They're price sensitive in that they're not here to really speculate or hedge. They're the true sense of buy low, sell high. And they're long term. And this is relative depending on how you change your time frames. But if we consider like the daily time frame, the organics have time frames of years, like months to years is traditionally what we see. And so the behavior that we find from the organic parties is that of attempting to buy low and sell high. And what this translates to is that the organic asks will tend to see price appreciate, or that's kind of what they want if we, and then spot usually follows. In the organic bids, we tend to see their influence is to push spot lower. And that's because they're actively engaging in the process that is going to make their profits maximum. So if transactions are occurring at the organic bid, they have incentive to drop the bid. Because the more they buy low today, then the greater they can sell high tomorrow. And additionally, the incentive of the organic ask is to sell higher. So if the organic ask is in charge, they're going to be, interested in spot moving higher so that they can fulfill the second part of the cycle and sell higher, because presumably they've bought lower. So those are the key characteristics of the organics. We can rely on them to be present, typically. And, that's a good point, because sometimes you do, I guess this is maybe a topic for later, but it's not good when you see the organics disappear, because of how long-term their time horizon is, relatively speaking. When they disappear, it's a real indictment of expected future price action, right? Like if the organic bid disappears, or the organic bid switches to an ask, then we know that the outlook is down. The expected price change is negative over the remainder of their trading time horizon. So it's not a good sign too much, usually. The eager parties, the eagers, and these are usually just abbreviated with E, and then like eager ask, eager bid. These are defined by having I had a word, because I want to be careful here with the words. Yes. So these have an obligation to transact. And so these are people who are, and through the fulfillment of their obligation, they're willing to cross the aisle. So they're willing to go past that midpoint, or usually try to hang out at the midpoint, depending, to get their transaction fulfilled, because they have this obligation. And this obligation can come in two varieties. You can have the price-insensitive obligation. And so these are transactions that need to occur not because of some value drive or some perceived change in value, but simply because of the mechanics of the market. And these are a good example of like options dealers, like hedging. Now, do options dealers prefer favorable transactions? Yes. But when we're talking about the plutonic ideal, how this system is quote unquote designed, the options dealers, their focus is in the transaction, in fulfilling that transaction in pursuit of hedging a particular position. And so while it may be opportune, if there are times when they can hedge in a price favorable manner, it's not fair to define their behavior strictly as a price sensitive or value seeking machination, because ultimately they are there to transact in pursuit or as a means to a different end. But that's not always true for the eagers. You can also have the price sensitive. And these are the, there's nothing grandiose here, but these are the profit takers. Typically, like if, there's a big price appreciation, it is the price sensitive eager bid or the, price sensitive eager ask that will step in to sort of very eagerly collect these profits. And so they're not the same as the organic ask, for instance, in this situation, because if the organic ask notices that transactions are occurring in its domain on its side of the book, it will raise prices, right? Because it wants to sell higher. This eager ask is interested in exiting now. Maybe not immediately, but they have maybe this is their benchmark to exit, and they're going to go ahead and do it. So we get profit takers and dip buyers. And these are the lower order LDPMs. Right, and I guess we should emphasize that the organics are the higher orders. That's greater than 89. Ooh, we gotta look at this guy over here. Let's put this on automatic so it was on. So we have these two flavors of of eager parties. We have the price insensitive, and then we have the price sensitive. And then next up, we have the aggressives. These are defined very distinctly by having urgency. So whereas the eager parties had an obligation to transact, they were playing in the market in fulfillment of or in pursuit of the fulfillment of some other goal, the aggressive parties need to transact currently right now. And so what we see with these is they move transactions to the organics. So they will chew through any eagers that are in their way, and they will move directly up to that organic. In fact, that's what we see here right now on Bitcoin. And we can see that what the price has done. Because these are the people who have stepped into the market. So these are the people who have stepped into the market to get things done right now. So these are very, in a sense, not price sensitive. But that's strictly because they don't have the pleasure of being price sensitive anymore. Classic example of an aggressive party is a covering short during squeeze. Right? Do they enjoy the price going up? No. But they must transact, right? They have to cover their shorts, because if the price is going to keep going up, that will be then a doubly losing position. They're going to have to still transact at presumably a higher price than if they just transacted right now. And they're going to do so at a greater loss. And they're going to have much more expensive carry costs as the price appreciates. So these are prime candidates to be aggressive parties. One of the things to keep an eye out for that is unique to the aggressive parties versus the eagers in particular is that these have a large tendency to provoke liquidity vacuums. As we can demonstrate that here. So if we have our organic ask, we have the organic bid, and say we even have an eager, right? Like let's say actually, let's in fact do this, and we'll say that this is where price is, and this is the mid. And say we have an eager ask and we have an eager bid and they're meeting at the mid and everyone's happy. And then in walks a short squeeze and someone immediately needs to start covering. Well, then they're not going to be an eager bid, they're going to be an aggressive. Oops. And the first thing they're going to do is chew through that eager ask, and then they're going to move up to that organic ask. The organic ask, noticing this, is going to do what the organic ask does. It moves spot up. And then when that happens, the eager party must once again move up to transact. Or the aggressive party, sorry. Because again, they must transact. They have to cover and they have to do it now. And so you get this like feedback cycle. But what happens is this space between what was the sort of well-behaved eager bid and where price has ended up becomes a liquidity vacuum. Because the next thing that might happen, for instance, I guess we can just is if that aggressive bid disappears. Here's where the mid was, zooming out, and here's their eager bid. The ask, even the eager ask, must now move all the way down through that liquidity vacuum in order to transact. And these can be very abrupt and sudden and really big candles. And just, I guess, since we're here, one of the ways that we can keep an eye out for this is when you see those big spaces, either, the aggressive bid cascades, aggressive ask cascades, but also when we notice those big spaces between the LDPMs. Because these are the organics, And so if price is up here, then we know that there's been an eager party transacting up at current spot. And if that eager party disappears, then spot has to move down to the organic. And if that organic disappears or gets exhausted and becomes an ask, then spot has to move back down to the next organic. And it might encounter a little eager, bid along the way. And then the cycle continues as this organic bid becomes exhausted. And it moves up and becomes part of the ask. We see the same thing. I'm going to move the other side as if time were moving backwards, but it's not. Don't worry. Don't get worried. And then the cycle continues. And this is a pretty common pattern if you have been watching LDPM and LDPS for a while. You'll see this pretty often. And that's what's happening. And if in the event of those eagers, so if we have like an aggressive ask or aggressive bid cascade, and spot moves up, the distance is that liquidity vacuum. And so that's why when we watch for the wave, we're looking for that transition between when something is a bid and then it gets exhausted and becomes an ask. And that's supposed to be pointed like here at the same LDPM. And those are the little liquidity vacuums. They're pretty neat. All right, enough about the aggressives, although to me they're the most interesting, they're the most fun. So now that we have a general understanding of the eagers, the organics, and the aggressives, and just to remind, what is it then if the organics are kind of in charge? We expect, if it's the ask, we expect the price to go up, and if it's the bid, we expect price to go down. The eagers can be price sensitive or price insensitive. Price sensitive, the eager bid will push price up. The eager ask will push price down. And the insensitive will the price sensitive ones, they're opposite, because the eager bid, they, let's suppose they're dip buying or profit taking, so they actually are interested in not buying up, right? They don't want to average up, they want to exit or average down. The price insensitive ones tend to push price up or to really just have price flatline. It's the same but opposite for the price insensitive ones. In the aggressives, will essentially, how do we say this, like facilitate organic transactions. And so the aggressives will, in effect, behave the same as the organics. Like they will be the ones that bring the plate of food up to that ask. For instance, if you're an aggressive bid. We see Bitcoin's doing some stuff behind us. We have an aggressive ask flowing to the bid. Indeed, we seem to. And so topic 1, a review of the organics and the aggressives, are complete. Next up is the flow states. And these are honestly pretty straightforward. There's 2 varieties. 3. We do occasionally have a neutral, but flow to bid. The easiest way to handle this is to translate this as the liquidity supply is flowing to the bid. So this means the asks demand is increasing. So when we talk about where liquidity is flowing, we're talking about the liquidity supply. Who is supplying this liquidity? Who is kind of facilitating these transactions? So when we're saying the flow is to the bid, this is telling us that there's some aspect where the market where the ask has a demand for liquidity. The ask is the one who needs these transactions. It has that, demand. And it's the bid who is the supplier. In other words, if in this situation, if we were flowing to the bid, then the ask transactions will move to where the bid is. If it's the bid that is the source of liquidity, and it's the ask that has the demand, then the ask has no other choice but to move to the bid to transact. And so if we go back up to this example here, where if we have this situation and the ask has this demand, we can kind of conceptualize this, say this is a, I don't know, some sort of eager ask, right? Maybe it's hedging, some options dealers. So they have this need, this obligation to transact. And then suppose all of the bid disappears. Then we're left with a market where, one, no transactions, but most importantly, two, the ask still needs to transact. The demand or the urgency or the obligation is still present on the ask, right? If you're an options dealer and you need to sell X amount of shares to cover your portfolio, and then there's no bid, that doesn't alleviate the fact that you still need to sell shares. You still need to hedge your position. And so you still have that obligation. And so you're coming to the market and asking the market to fulfill its function, which is to or to facilitate favorable transactions. And the market isn't able to do it. Why is it not able to do it? Because the liquidity supplier isn't present. The bid has disappeared. And that's what the flow to's designators mean. So when it's flow to the bid, it means that the bid is now the one kind of in charge. And conversely, when it's flow to the ask, then it's the bid with the demand, and the ask is becoming in charge. And this is the dynamic that moves and changes as trading goes on. And this is one of the first, this is this framework is a direct consequence of, my lack of confidence in the prevailing idea of liquidity, where only either one of these sides is the liquidity supplier or the liquidity taker. You can have both the bid and the ask performing both roles, sometimes in quick succession. It really just depends on who's stepping into the market to transact right now. And I think tomorrow's video, I will talk probably briefly, we'll see, it might be long, but on the overarching liquidity theory that Deep Dive Stocks has developed. And that should help hopefully contextualize more of these ideas. But right now we're just kind of looking at the functional stuff. What does this mean for me today? So when we have a flow to the bid, that means that the ask has more demand, urgency, obligation to transact than the bid does, and so the bid has the source of liquidity. And conversely, when we go to the ask, it's the opposite. So that covers that. And so our last task today is to look at some combinations. And what do they mean? What do you mean? So first, let's look at the two that are the most straightforward. And that is when you have a aggressive bid plus flow to the ask, and an aggressive ask plus flow to the bid. And these are the most straightforward. Let me just rearrange this. When we have the aggressive bid, this is telling us that the primary transactor is urgent, right? It has urgency. And they are demanding transactions from and aggressive bid flow to ask, right? From the ask. So they're demanding transactions from the ask. This is your aggressive bid cascades, your aggressive ask cascades. And so the outcome, or the expectation, is price appreciation, right? Because the aggressive bid is going to move through any eagers present right to that organic ask. And then we see the organic ask is getting the liquidity. It's getting that the key to the kingdom. And so we expect the same as if we were just having regular transactions at the organic ask. And so the organic ask is going to do its normal thing where it's going to say, obviously, I'm going to move price up. And so this is a classic aggressive bid cascade. And that's why those typically see such large price appreciations. But also, again, keep in mind that these are super high risk for those liquidity vacuums. And then the other case where we have that aggressive ask plus flow to bid, and it's the same but opposite. Where we have this party moving swiftly down to the organic bid, and the organic bid is now the one setting the beat, right? So these two are pretty like the most straightforward way that these data present themselves. As we can see behind us, though, we have a similar situation where we have this organic bid and flow to bid. So what is that telling us? Well, when we look at the organic statements, organic bid, this is telling us that transactions are mainly at the organic bid. If you want to get technical, you do know I love getting technical. This is our midpoint. The organic bid is telling us that we are transacting some point, oops, wrong way. No, that was the right way. Somewhere between the midpoint and the organic bid, but largely near the organic bid. And when we have the organic, we're transacting at the organic bid and we're flowing to the bid, then this means that the demand of the ask to transact is greater than the demand to transact for the organic bid. And so the organic bid becomes the liquidity source. And our expectations, as we can see behind us, is price depreciation. Now, these don't tend to create such a high risk of a liquidity vacuum because the agents that are moving down to that bid aren't necessarily aggressive. It might just be that there are no, complementary eager bids currently present. Not at this level. No one's interested in buying this particular dip. Maybe the next one, but not this one. And so the ask has no real choice but to then extend down to that organic bid. And so it's not quite fair to call that eager or aggressive because it may be a relatively small amount of eager ask, but they're sort of magnified in their effects simply because of the absence of the sort of complementary eager bid in this case. Then we have the organic ask plus float ask, right? Yes. And super similar story. It's just backwards. We simply have a situation where the bid is moving up to the organic ask to transact, but it doesn't necessarily need to be a hyper aggressive or hyper eager, but rather there might just be an absent eager ask to sort of match that transaction closer to the bid, or closer to the mid rather. So we don't really have a party that's chomping through everything it can in order to transact, and it just so happens to make its way up to the organic ask, like the aggressive parties do. But this is just, a bid that needs to transact, and there's nothing standing between it and the organic ask, and so that's where it transacts. And the flow to the ask is telling us that the demand to transact on for, why did I choose to not spell it right and then make it worse? For demand to transact for the bid is growing. Right, we have that flow to the ask. So the ask is becoming the trend setter. It has the keys to the kingdom to transact. So we have the organics, but we still have a few more on the organic side. So let's bust through it, right? So we have the organic bid plus the flow to the ask. Oh yeah, so I guess real quick, so what are the expectation here is price depreciation. We have this organic bid, flow to the bid. And the opposite then is true, where we have the organic ask, flow to the ask. Our expectation is organic ask, flow to the ask, price appreciation. Right? Yes. Just had to make sure. My brain did a little hiccup. So now that we're at this organic bid, so we know we're predominantly transacting somewhere between that midpoint and down at the organic bid. But we're starting to see that liquidity is flowing up to the organic, is flowing up to the ask. Like this. Jeez. And that paints this sort of picture. Because remember, the organic bid part is telling us that we don't really have, we have minimal evidence of an aggressive party or even like this price insensitive bid. I don't want to get too technical, right? But this idea that we are moving down towards the bid, the organic bid, we're sort of probably halfway, we moved past the midpoint. But the flow to the ask is telling us that there is, because ordinarily that would be like the situation we saw above. But when we start seeing flow to the ask, it tells us that there's a growing demand from the bid to transact. And so this means that there's an early eager bid. I always see it as like an eager bid, kind of like a tree, like growing out of that organic layer. And so with that eagerness comes a little bit more demand to transact. And so it starts meeting the eager bid or the eager ask. I have these backwards. The eager ask, eager bid. And so that eager bid is moving up to that eager ask with increasing force. And so you normally see these at the bottom of dips, right? So the expectation is typically that the price will stop moving down and likely stagnate a little bit. And then we expect the eager bid to emerge. Right? So we should then expect LDPS to soon, if the demand keeps growing, and then as that demand chews through the eager ask that's currently present, then ultimately we should start seeing that eager bid moving up and transacting closer to the ask. It'll be like that would be the expected next outcome, right? So this usually leads to eager bid plus flow to the ask. And so that's why this isn't really, it's not indicative of price appreciation in of itself, but it is the early signs that the process of converting, the process of a small little shoot of eager bid has moved up through above the organic bid, and it's now starting to eat away at that eager ask that was originally pushing things directly down to the organic bid. In fact, that's what we have on Bitcoin right now. And we can see price should ultimately, so I guess I guess the other option though is if that eager bid disappears, then we should go back to organic bid plus flow to bid. And this obviously leads to downside. This leads to upside. So we're kind of in this transition period. And this transition period we sort of reach typically after price has already declined. And now the boat is starting to balance itself out a little bit. And the same is true, except opposite, if we have organic ask plus flow to bid, right? I'm not crazy. Organic bid, flow to ask. Organic ask, flow to ask, yes. In the same story, we have this organic ask, this organic bid. We're probably transacting here originally. And now conditions have changed where maybe we're transacting right at the mid. We've had this growth of this eager ask, right? This flow to the bid is telling us that there's more or growing demand to transact. From the ask. And so it may seem like a lot of different types of combinations, but hopefully by now it's looking a little bit more apparent that it's really just half of it, and then you just flip the other half. Now the organic or the eagers aren't quite as straightforward. So if we look at an eager bid plus flow to ask, bid. And then we have that flow to ask. This is, I'm not going to go through all of the hoops this time, right? So the idea is that we have this eager bid, but this flow to the ask is telling us that there's a growing demand from bid to transact. And so what this means, or what this infers, is that this eager bid is price insensitive. It is willing to fulfill its needs, which are growing, by moving up to the organic ask. Remember, if we're price sensitive, we still kind of want to buy low, even if we're eager, even if we're buying dips. And so when we see the eager bid coming in and also bringing the demand to transact with it, we know that it's less about a price value and more about the fulfillment of some obligation. And what can we expect with this? Well, we have to be watchful for when the obligation is fulfilled. Because then the eager bid will simply disappear. Leaving a little bit of this little liquidity vacuum. When we have a eager bid, flow to bid, This tells us that the eager bid is being digested and that this is most likely a price sensitive transaction. The bid is eager, it is transacting, it's moving up, but it's not doing it in a way that is desperate. It'll wait for the spot to come back down, right? So it'll move up, say to some point, and then it will move back down. And it will wait for the ask to bring its demand to it. These are longer lived than the eager bid flow to ask, because you'll see them enter and then come and then move back down to the organic and then enter again, move back down, because they're trying to transact, maybe take some profits, maybe buy some dips, but they're not going to go out of their way to do it, right? So like if you picture the price dips and say like this is where a dip buyer wants to transact, well, then it'll do it here, and then it'll do it as the price goes up, but it'll withdraw as the price moves beyond that point. And if the price keeps going, then we typically won't see the reintroduction of that at eager bid, but if the price dips back down, then we'll see the reintroduction, and so on and so forth. And that's the pattern you typically see with these price-sensitive eager parties. And the same is exactly true for the eager asks, flow to ask, and the eager asks, flow to bid. These are typically price insensitive, and these are typically price sensitive. So our current conditions are at the organic bid, flow to ask for Bitcoin behind me. At organic bid. And that's kind of the situation going on right now. So we're transacting at the organic bid, but we do have a little bit of this eager bid that is trying to work its way up. Not doing a good job in current environments. But this is the 30-second candle, so. But that eager bid tells us that there is, you know, as we said, kind of like two main, because this eager bid is kind of budding, right? It's trying to, so if its eager bid gets squashed, then we expect return to organic bid, flow to bid, in which case we expect continued downside. Or if the eager bid grows, then we expect some stalling in the price. And it's kind of the middle zone that this exists in. There's still a force pushing down, but we're getting these occasional springs, these fonts of bullish ideation, working to sort of help stabilize the price. Pretty cool, I think. All right, I think that is it for this video. A little longer, but I'm enjoying these longer videos on the weekend, a little shorter during the week. And I think that covers it just about. So quick recap. 1, what is organic, eager, and aggressive? Oh, and there is another one called the absent, but we haven't talked about that one yet. We'll do that in another video. But it is interesting because one particular stock in general tends to have a lot of absent parties. So just like we expected, we are seeing a little bit of price leveling out as the eager bid starts to slowly pop up through that organic bid. But the name of the game is still, how long is that eager bid going to last? Right? LDPS isn't convinced it's going to last too long, or else it would change. But going back to the recap, we remember the highlight of the organics are that they are value seeking. The organic ask is inclined to, it is favorable to the price appreciating. The organic bid is favorable to the price depreciating. The eager parties can either be price sensitive or not price sensitive. The price sensitive eager parties are those who are profit taking. And dip buying. So they still have a value in mind. Oh yeah, look at that. See, it disappeared. Flow to bid. And now price resumes its downward movement. Because that eager bid that was slowly starting to poke through the ground is gone now. It's gone. You can never rely on those flow to ask eager bids. The price insensitive eager parties are, your hedgers, swaps, so on and so forth. Anything that is more in line with I am transacting in pursuit of some other goal. I'm not really here for the value of the underlying asset in and of itself. The aggressive parties and the eagers are defined by this sense of obligation. And the aggressive parties are defined by their urgency. Urgency plus liquidity vacuum are the two phrases I would associate with the aggressives. The urgency because they must transact, and so they're, whether or not they're price sensitive or price insensitive or value seeking or not value seeking is really irrelevant in this moment in time as they're entering the market to transact. And in their zeal to transact, they tend to leave behind these liquidity vacuums. For flow, we went over how this was a measure of supply and demand. So when we're flowing to the ask, that means demand is a bid and the supply is the ask. When we're flowing to the bid, the demand is the ask, and the supply is the bid. So it's telling us who has the demand to transact, and who is the counterparty, who is facilitating, who is supplying the transaction, the other half of the transaction that is required. And then we talked about the various forms, right? So we have like the organic, the eager, the aggressive, and then the flow to ask and flow to bid. Right. I probably won't go over all these again, just because with the way I ramble, this will be a whole nother second half of a video. But the key ones to remember in these combinations I would say, are the mixed ones. Like the ones that I think, for me, the most interesting ones are these guys where you get this eager ask, float ask, right? Where you're in this transition period, you're in this moment of moving, right? Oh, and that's what we have again, right? And just as we expect, the downside has been stifled for a second. But overall, we still have the predominant party is this eager ask. But remember, if we then apply what we learned earlier with this idea of coming and going, we've kind of been watching this process play out on Bitcoin, where this eager ask, flow to ask kind of is eager ask, flow to bid. It's kind of been doing this. When this happens, price declines. When this happens, price kind of just stays the same. And we just mentioned earlier that this is behavior reminiscent of a price-sensitive eager party, and in this case, eager ask. So in other words, we have evidence of profit taking. And we have profit taking while Bitcoin is down, right? So these are people very much so looking to exit this position, but they don't quite have the urgency yet of the aggressive parties. Like they're willing to, apply the pressure and then wait for things to kind of come back up, and then apply the pressure and wait for things to come back up, and then apply the pressure, so on and so forth. And they're sort of optimizing for their, sell high without slamming the price down. And we see here again, we've just switched back to the floated bid. And so we should expect price to start back up in its downward trajectory. And that's kind of the cool aspect of these data, right? And that's here what we're talking about again. And yeah, so although, it is ultimately optional, LDPS is designed to be pretty straightforward. If it's red, it should go down. If it's green, it should go up. But for those who do want a little bit more of a puzzle in their life and want to digest a little bit more and chew on a little bit more of what is kind of happening behind the scenes, these data can be particularly insightful because it really does help give those more nuanced views of the market that really only LDPS and LDPM can give you. And I like that. I'm happy for that. I'm excited by that. So, all right, guys. Today has been a pretty long video, but pretty fruitful. I hope after this video, I hope you've watched it, obviously, but I also hope that you have a expanded understanding of what does text mean, how we can interpret them, and what they can do for us. And if not, then let me know. If there's any part of this video that was too confusing, if I went too fast, if you are still looking for additional examples or more practical applications, let me know, and I will make that video. Otherwise, it has been fun. I shall see you. There we go. We're getting that aggressive. So the eager is turned into an aggressive. Are we going to see it in real time? We saw it flicking. It was coming in and coming out. Ooh, we're neutral. That was the one thing we didn't look at. Basically, it just means the demand is equal on both sides, and we get that aggressive bid. So now we should see a switch to flow to ask soon, if that aggressive bid is able to chew through all of that profit taking that was going on. But someone is now dip buying, in other words. It looks like early signs of a dip buyer. Pretty cool. But okay, guys, I am going to leave it here, or I will be here all night. And I don't think either of us want that. So, all right, guys. Till next time, tomorrow's video is on the overall framework and view of liquidity as, created by Deep Dive Stocks. Oh, eager bid disappeared. But that did not last long, huh? There's some real profit taking going on then. That was absorbed very quickly. But okay. If it is past tomorrow when you're watching this, I definitely recommend checking out tomorrow's video on the overall framework of liquidity. If it's not past tomorrow, by the time you've seen this, you're gonna have to wait a little bit. But then I do recommend you go and watch that video as well. And I shall see you then. Adios. Happy trading. Adios.